All right, welcome to this video on supply and demand. And in this video, we're going to talk about market dynamics and supply and demand in the market, which is really support and resistance from a technical standpoint. So we're going to discuss what supply and demand are and also how that translates to support and resistance, which is what makes up the patterns that we can trade as breakouts. So let's first take a look at supply. And if you'll notice here in this chart, as the price increases in the market, the number of units also increases. So what this means is that when you have a market that's rising, as the market reaches the top or a swing high, the number of units is at its greatest number. All right, so the number down here at the bottom is going to be less than what it is here at the top. Now, demand is the exact opposite of that, where as price increases, the number of units decrease. All right, so let's go ahead and take a look at supply and demand and how we can translate that onto a price action chart. All right, so let's take a quick look at how supply and demand can be used to identify support and resistance areas within the market. So here we have the British pound US dollar daily chart, and you'll notice that we have a horizontal key level here where the market first found this area as resistance back here, and once the market broke through on this candle, it then found this level as support. All right, so in terms of supply and demand, what we have here is back here when the area was acting as resistance, we have an increase in supply. So what this means is that as the market approached this level, this swing high, the number of units increased as sellers came into the market and pushed the market lower. And inversely, we have the market acting as support back here once the market broke through. And what this means is that we have an increase in demand as buyers came into the market and decreased the number of units available, which pushed the market higher. All right, so that's how we can use supply and demand in the market to come up with areas to watch for buy and sell signals. All right, so now that we've taken a look at how we can use supply and demand to identify horizontal levels in the market, let's take a look at how we can use them to identify channels. Here we have the New Zealand dollar, Canadian dollar weekly chart, and you'll notice that we have this lower level down here acting as support, which can also be thought of as demand. So we have demand here as buyers come into the market and push it higher. And on the opposite end, we have resistance up here where sellers come into the market and push it lower. So again, we have supply up here, which pushes the market lower. And down here we have demand as buyers come in and bid the market higher. Now, this represents a channel, but we can also use supply and demand to identify areas that make up a wedge pattern. So if I move down here to the 4-hour chart, we can see that we have a market that's currently consolidating into this wedge pattern. All right, so we can also use supply and demand in this way to identify a wedge or triangle pattern, which we can then use to trade a break of either support or resistance. All right, so that's how you can use supply and demand within the market to not only identify horizontal levels, but also identify channels as well as wedge patterns.